Welcome to the Cap Planner podcast, where we dive into the dynamic world of private capital markets. Whether you're new to private market investing or a seasoned professional, this podcast unpacks the latest trends, insights, and opportunities shaping the industry. Featuring expert guests and deep discussions, Cap Planner is your go-to resource for staying informed and inspired.
Hello, Morgan. Hello, Mark. Nice to see you both.
Good to see you.
Well, I'll start and introduce. We've got, as you know, my partner in crime, Morgan, and then Mark Brooks, who is coming to us from Raleigh, North Carolina. And Mark, how would you describe yourself? A corporate venture expert, guru, or?
It's a good question. I would consider myself a corporate venture capital, I guess expert might be a strong word, but certainly someone who's well versed in designing, launching, managing, running, and growing such things. But I'm also a climate scientist by training and formerly an academic scientist as well as entrepreneur.
You wear a lot of different hats because you obviously have, I guess, for somebody who doesn't know you, who hasn't looked you up online yet, can you tell us about who you are?
Yeah, absolutely. So I've always been very attracted to difficult things that are kind of off the beaten path a little bit. I've always been a nonconformist in that way. So I studied meteorology at North Carolina State University. And when I graduated, I worked at North Carolina State for right at a decade doing research on the intersection of climate and agriculture, or climate and transportation, or climate and energy, and various other sectors. I did not enjoy being an academic, but I did enjoy the science. I enjoy creating things out of the research. So I left that, started an ag tech company. This was back before ag tech was
Ag
even
tech.
a named category. Like nobody called it ag tech back then.
I remember I had a client back, early on, probably 20 years ago, that was using like chromosomes on cows. And then I took a trip to Israel, of all places, where it's like they have such incredible dairy coming out, and they learned really to get the most milk and from cows, right? So that was my first foray into ag tech. So that's I assume what you're talking about, right?
Yeah, so we were doing decision support tools for farmers, helping growers of specialty crops manage their risk from frost and freeze, or kind of just managing the sugar levels in grapes preceding harvest, just as two examples. So did that for a few years, and then I kind of transitioned or pivoted my career into a completely different direction. I went into corporate strategy for a while. I worked in the railroad industry for a bit
What
in
corporate, when
strategy.
you were in corporate strategy, where was that?
So it was a company called Rail Inc., which is it's an IT company that's owned by all of the freight railroad companies in North America. So all of the movement data of the train cars, the health of the train cars, all of that stuff feeds into Rail Inc. And then Rail Inc. does a bunch of analytics and things to it, and then shares that back to the industry
Us
to
being a
improve
data company where everybody gives us their comp data, and we do
Yeah,
the data analysis, and we give it back to them to know what to do. That makes a lot of sense to me. And I also love the pivoting, right? Because that's a career in and of itself as an entrepreneur and being innovative, which is really the crux of, I was just reading the article. I've read it now a couple of times, but I don't always digest articles that are longer in as well. So I have small doses of it. And
Why our podcast episodes hover around the 20-25 minute mark is because it's digestible.
right.
yeah, I totally
Yeah.
get it.
But you really
Totally get
have
it.
an innovative mindset. So you've looked at so many things in ways that inspire people to not accept the norm, but to look at it from have different optics on it.
Thank you. That's exactly the way I think about it. That's exactly right. And so after that, I went to Syngenta Ventures, the venture capital arm of Syngenta, which is about a $50 billion a year company in the agriculture industry. So I was one of the investment managers there, investing in Series A, B, C stage companies all over the world.
What was your biggest learning curve going from managing data from a railroad company essentially to a corporate venture arm?
Or you were investing. So you obviously use something that came from one side and put it into the other.
Yeah, there is a space in between. right after Rail Inc., I went to an organization called the AICPA, which is the world's largest association for accounting professionals. So think of the AICPA as like the Vatican of accounting and finance. Like that, when the AICPA speaks, the accounting world pays attention. That's the body that writes the CPA exam, for example, globally. And so there, I was in corporate strategy and innovation, and kind of the transition to venture capital was while I was at the AICPA. Having the entrepreneurial background, the science background, I really wanted to create something that tapped into the startup ecosystem. And the accounting profession is rapidly changing and evolving. It's going to probably be unrecognizable within our lifetimes. And so while I was there, I architected and led the corporate venture capital program at the ASCPA. So we're looking mostly at pre-seed stage companies.
I think we
That's
need
what
to couch, because for those folks that are listening, what exactly corporate venturing is. And I think we are all probably equipped to be able to address it. So from my vantage point, the definition of a corporate venture firm is an investment arm of a major corporation that is either that can be structured many different ways, right? A separate balance sheet, or it can be completely part of the parent company. But regardless, they are a part of most large corporations to stay somehow innovative and part of the investment firm ecosystem. The biggest difference is they get the money from the parent company versus a true venture firm or private equity firm that raises money from outside from many investors. Mark, what's your take on that?
Yeah, that's well said. I think you nailed it. In a nutshell, that's what it is. A corporate venture capital fund has one LP, which is the corporate parent. And that's where it kind of differs from a venture fund in the traditional sense. But I think the reason that a corporate fund exists at many corporates, the reasons span a lot of different things, but the main gist is to look around the corner, see what's next in their industry, not be surprised by emerging technologies or emerging innovations, and be part of shaping whatever that future is that's being created. A good CVC, we call it CVC for short, a good CVC is going to leverage the startup ecosystem to inform its own strategy about where to go next. But it's also going to create optionality for the corporate parent, meaning optionality in the sense of maybe this could turn into an acquisition later. Maybe this will be an incentive or a carrot, to create some collaboration between the startup company and the corporate parent. And there's a lot of different ways to do those programs, a lot of different ways to fund them, to manage them, to run them. There's no one size fits all.
How have you seen CVCs be successful?
So I think it's important to put CVCs in a little bit of historical context. I think CVCs, if you look at other corporate functions, the corporate venture capital function is still a relatively new thing compared to other corporate functions. And so, we can cherry pick some examples of what's good and bad, but it's still early days. And I think if we ask that question a decade from now, we'll have a much more rich discussion about it. But I think the main essence is that the CVC will create a conduit between this messy, difficult to access, hard to penetrate startup ecosystem at the very earliest stages, a conduit between that and the corporate parent, which is also sometimes bureaucratic and messy and sort of,
Right.
stuck in the status quo way. And a good CVC is going to be a bridge between those two worlds, translating the interests and the needs of both sides through its collaborations, but also with the allocation of capital, creating those incentives between the two parties.
We've looked a lot at a number of things, one of which, and we put this in our monthly newsletters, is how the goal of the CVC unit how the goal of the CVC unit impacts compensation for the CVC team members. And then the other part of it is that we've looked at how we've seen investment firms, traditional investment firms like venture capital firms, mimic what CVCs do really well, which is deploy resources from the parent company to the portfolio companies.
Even further to that, Mark, you say that the exact connection of what Morgan's saying is that not only the CVC and the parent company, but that connection with like a business development person or some other role is really the crux of what makes the corporate venturing and a very integral part of this innovative ecosystem with private companies. And that's something that also venture firms have really started, because we know, right, we track all the jobs and the compensation, that they're trying to integrate that as well. So you clearly have some thoughts on that.
Yeah, absolutely. And this is where I think personally that corporate venture capital can and often is better suited for the entrepreneur than a pure financial venture capital fund would be. And the reason I say that is because the CVC is going to bring a lot more than capital to the cap table. They're going to bring the global footprint of access to retailers or distributors or partners or co-development for R&D or regulatory expertise in certain cases. And so that is going to be, in some cases, equal to or even greater in value to the amount of capital that's being delivered to the entrepreneur or to the company.
When I started the first CVC compensation survey, there were 8 job titles. Actually, I think there were 5 job titles. And Morgan, how many do we have today?
11.
Right. Well, they've doubled. And on the investment firm side, the venture side, I think we had 30 job titles. How many do we
Right.
have?
75.
We have 75 now. So that's doubled too. But the interesting thing is the jobs that from the CVC side, a lot of the VC firms have now, like portfolio services and all and I think the thing that doesn't really capture exactly on the corporate venture side is some of those roles come from the parent company and they're not separate to the CVC firm, like HR and other resources, right?
Yeah,
Looks like now you might not necessarily be 100% on the corporate venture side, but what you said is so interesting is that if you were a startup founder or a CEO, that you would rather take the money from the corporate venture arm than the traditional investment firm arm or the traditional venture capital arm. Is that what you're doing a little bit more of today now that you've moved? Obviously, you're still in the global private capital market world,
But
but
you're
what
investing
is
on your own from your own, right?
right?
yeah. So I was, yeah. I mean, so most recently, I was the head of FMC Ventures, the corporate venture capital arm of FMC Corporation. I left that role in March, and I'm sort of in a transition period right now. But I would agree. I would still stand by my earlier statement that you just quoted me on, Morgan, which is, as the entrepreneur, all things being equal, if I've got a term sheet from a private kind of financial fund versus a term sheet from a CVC in the industry that I'm, in, I would rather take the CVC capital because of all of the kind of the intangibles or the those other kind of fungible assets and capabilities that come along with it. And it really should be in the interest of the corporate to continue to allocate capital in that way because there really is no other way. A lot of corporates have an R&D scouting team. They have a team that scouts, and that's great, and that's fantastic, and that has a role. But that is not a substitute for the allocation of capital to those startup companies in the form of an investment for equity, because that equity investment will create incentives, it will enable conversations, and it will enable transparency and real discussions that an R&D scouting team will never be able to penetrate because they don't have the same level of commitment or capital to it.
Well, some of it has just been a headbanging exercise, right, in dealing with the corporations, because we get these phone calls all the time from the investment people where they're like, listen, we need help getting through corporate HR because we need to structure the compensation to match exactly what you're saying. We are required to be innovative. We are not reacting. We are being proactive to what's going on, to change, to have creative ideas, to find companies that are transformative, but our compensation is very traditional and that's not aligned. I mean, what's your thought on that?
Fully agreed with that. And I mean, I think there's all kinds of different compensation models for CVCs. It really depends on the objective of the CVC overall. But I would argue that you've got to compensate the CVC team in a way that they are super committed, embedded, that they are not going to take flight, at the first
Yeah.
venture fund that comes along with a double or triple sized offer. And so that means you've got to have a really solid base compensation that's super competitive. Um, and alongside that, have some kind of upside, I think, in the portfolio that's being built out. Whether that, and of course, there's all kinds of nuances there. It could be direct equity upside, or carry or shadow carry,
Right.
or it could be. It depends on the industry that you're in, or the size of the investments. But it could also come in the form of restricted stock in the corporate parent.
And we're consistent about that. I mean, we do a lot of we just did a webinar that was on the difference with restricted stock and different types of equity awards. And there is a lot to be. Maybe you don't get that big upside all at one time, but let's face it, who's getting those big upsides now? I mean, the private
Taking a
markets are
long
staying
time.
right. Yeah, taking a long time. The M&I market is a little is tapped down. The IPO market is sitting on the sidelines right now. So they're having corporate stock or restricted stock, that does have some upside.
Yeah, oh, that can be very attractive. I mean, and then that kind of dovetails into a related point, which would be the talent profile of CVC teams. I think I see this a lot. I see corporates often, hiring people from internally from the biz dev team, or
What do you think about
some
that?
R&D leader or whatever, and that's fine. Again, I think those are talented and skilled people. But here's the deal. For a corporate venture capital group or team to have credibility, be able to move really fast, they have to have the internal credibility and the external credibility. So what I mean by this is, internally, they've got to be able to navigate the politics, corporate bureaucracy, which exists in every large corporation. So they've got to, you got to have someone like that. Also, someone who has the ear of the CEO, the C-suite team, the ear of the board, who has the confidence and respect of that level within the organization. But at the same time, these people have to be entrepreneurial. They have to be
Right. And
provocative,
connected to the private markets in some way.
and they have to have a network and have access to and have some kind of experience in the private markets, whether
Right, to
that be
get real
private equity or
and
venture capital.
right, and to know what's going on because it's not all
Right.
inbound. A lot of it is also word of mouth and
That's
discussion
right.
that goes on. Listen, I spent
Yeah.
10 years working for public companies. I mean, it's a miracle I didn't get fired because the whole time I mean, that's how they would put me on special projects because it was clear that I had a disruptive mindset, which has turned out to be good running my own company. I am the parent company, right, Morgan, literally and figuratively.
Yeah, I am the corporate venture arm and Jody is the parent company.
Mothership. I read that in your article and
Correct.
I thought, how perfect is that?
Yeah.
Yeah.
Mark, tell us
We-
how this is all fit into what like your personal interests are and how you balance this. We just had on Sue Siegel, who you may know, who came from GE Ventures, and she talked a lot about the balance of her career and the different. I mean, you've
My
obviously
life.
had a lot of experiences. Yeah, Morgan, you finished the sentence.
Yeah, your career, your personal life, because there's obviously you're not working 24/7. It's impossible.
Yeah. So I think what I'm interested in, and this has taken me a long time in my career to arrive at this particular insight that I'm getting ready to share. But I strongly believe that capital, the allocation of capital, that is the absolute sharpest lever that exists to shape an industry or to shape a sector. And I also believe in it, by allocating that to innovation. That's what you do. And I think that's the sharpest lever we have. I also think that corporations, middle and large corporations, especially global ones, have, with their CVC, the biggest opportunity of our generation to shape their own industry or to shape their own sector. And so, as I think about what I'm wanting to do next in my own career, I want to continue to be on the allocation side of capital to fund those innovations that are the most promising things, and particularly in spaces that are science based, science driven.
Sounds like that.
And could be ag, water, food, energy. These spaces that are
Could be
impactful
healthcare.
for the rest of our generations and our kids' generations.
Yeah, could be anything related to, a lot of the health stuff that we're learning is about longevity. I mean,
Mhm.
all of this is
Yep.
tied together. So that's the part. I guess it's a good way to wind up to be. I also hear what's next for you in terms of, it sounds like you're check writing, but it also doesn't sound like you stop pivoting. And that's what I really am so impressed in hearing about you because first of all, you're obviously at a good point in your career and that you have enough wisdom to know that having a definitive plan is probably not
My great
realistic.
grandmother used to say this: We make plans and God laughs." And it's one of those reminders where I think somebody told me that the other day, they go, "Well, this is what I'm going to do in 6 months, but that could change." And I think that's the key part, is that could change.
Yeah, and I like your opinion of how you feel corporate money is really relevant in the ecosystem. And then the next thing I heard you say is that putting money in is really relevant in the ecosystem. And we know that better than because, despite the fact that the markets are tough right now, I mean, every single day we here at Thelander get an inbound call for consulting and every day, people participate in our investment firm or private company surveys. Literally, it never ends. And while one company may be struggling, we have in funds that are saying they are just close their next fund, or firms that are hiring and board meetings. It's never going to end. So it sounds like your next chapter is to make sure that you can keep investing.
Absolutely, yeah, and in particular, I'm keen to find the collision spaces between sectors and industries because I think that's where new markets can be created that we don't even have names for yet, and so that's where I'm putting my energy into, is to figure that out and land in something amazing.
Mark, you're very
Totally agree with.
innovative, and you live
Yeah,
in a very
more.
innovative area too. I mean, the Raleigh-Durham area has just completely changed over the last couple of years, and it seems like you're really such a great example of how and why, because there's minds like you who are really looking forward and open.
Well, thank you. That's very generous of you to say. There's a lot of people like me down here, so I got to give a shout out to them as
How
well.
when you say it with that Southern accent, it makes it all just sound so
Nicer.
enticing and
Yep.
so warm and happy and peaceful.
Yeah.
So I guess that's a good way to wind up. So Mark, we thank you.
Yes, thank you for joining us. Absolutely.
Thank you, Jody. Thank you, Morgan.